Time for business. We're starting in France today. Google been sanctioned over its privacy policy, hasn't it?
Yeah, France's private data protection watchdog, get there in the end, fined Google €150,000 over its policy, which deals with users' personal data. The company was found to have failed to sufficiently inform users of when and why their information was being collected. Now, the ruling comes less than a month after the Spanish privacy watchdog fined Google €900,000 over the same policy. There are 4 other EU countries also investigating the internet giant over this issue. They all concern the move that Google made back in March 2012 to have one privacy policy across all of its services, Gmail, YouTube, and the rest. Now, it's not a huge penalty, especially compared to Google's profits in 2012 of $10 billion, but it is the maximum penalty the French privacy watchdog can give out. In a statement, it said the watchdog had given this financial penalty, the highest it had issued until now, and was justified by the number and seriousness of breaches in this case. Now, Google says it did cooperate with the French inquiry, and its new policy allows it to offer more efficient services to its users. It says it's taken note of its latest decision and is considering further action.
Regular look at the markets. What's happening?
Well, we'll start in Asia, first of all, where the markets were jittery ahead of big US jobs report due out this Friday. In China, figures there showing inflation fell to 2.5% for consumer goods, below the target set by the government, but fears over where investors will put their money in a new wave of stock market flotations sent Chinese shares into the red. You can see the Shanghai Composite down 0.8% there. Here in Europe, a reasonably flat open to trading this Thursday, just the FTSE 100 in London slightly up. Here in France, the Trade Minister Nicole Bricq has said that France's trade deficit fell last year by €7 billion to €60 billion. That's despite an increase in November. The CAC 40, as you can see, ever so slightly in the red.
Now, Stephen's been looking at shares in British retailers. This is after the announced sales figures for December. Starting with Marks & Spencer's, though, you said you got your turkey in there. I got my Christmas pudding. Didn't seem to help, did it?
No, 1 in 4 British families bought their turkeys in Marks & Spencer's, according to these later results. This string of disappointing results from British retailers, though, is being called the nightmare on High Street. It's been a disappointing across a range of British retailers for that all-important pre-Christmas period. Now, 3 of the big brands reporting sales figures this morning. Marks & Spencer's, you mentioned, their like-for-like sales down 0.2% overall in that run-up to Christmas, but down even further, particularly in its clothing division, where it's been having difficulty in recent times. That's seen shares down this morning by around 1% in London. For Tesco, however, the world's, of course, 3rd largest retailer, their sales were down as well. Down 2.4% in that pre-Christmas period. They say that's down to a weaker grocery market, and that's expected to have a knock-on effect on their profits. Their shares down around 2% this morning. One more retailer, the smaller rival Morrison's, very well known on the British High Street, their sales fell by 5.6%. So really a string of disappointing results from that sector.
OK, all eyes on Britain for that one. All eyes on Frankfurt later. This is for the meeting of the European Central Bank.
Yeah, now, we're not expecting any major news from Mario Draghi when he gives his interest rate decision and habitual press conference later. The ECB will be concerned, though, about the declining level of inflation in the Eurozone. It fell to 0.8% in December, far below the bank's target of 2%. Now, after the last rate cut to 0.25% back in November, the bank's unlikely to make any further changes to that, but we may see them signal a willingness to cut rates again if inflation doesn't pick up.
Something different for you now. Here in France, in fact, an interesting scheme. It's aimed at encouraging workers to return to one region.
Yeah, the Auvergne region in France is one that suffered from falling population in recent years. So the regional government there has stepped in, offering financial and other incentives to try to bring workers to the region. It's hoped that bringing these people will help to attract and maintain the economic activity there, as Joe Tandy's been finding out.
Rolling hills, wide open spaces, and now new opportunities to spread one's wings. Auvergne has struggled in recent years to hold on to its best and brightest, so authorities in the region decided to pay people to relocate there. Ambroise Boisvignier moved his wife and children to Auvergne from Paris 2 months ago. Since then, he says he hasn't looked back.
Today we've got a 125 square metre apartment compared with the 55 square metres we had in Paris. We've got a great view of the mountains. Before, we could just see a wall opposite us.
Dubbed the New Deal, the programme advertises job offers on its website while providing financial aid to cover the costs of relocating. Vincent Routaboul took advantage of the deal last year, landing his dream job and settling his family in Auvergne.
Thanks to the New Deal, I received €1,500 to cover my transport and accommodation costs during my trial period. It was this that convinced me and my family to move here.
It's a boon too for the region's bosses. Many had struggled persuading prospective employees to make the move. Meanwhile, local authorities say the new deals allowed them to help startups get off the ground while slowing the regional brain drain. So far, they've received more than 2,600 applications for this year's edition, with some 200 jobs up for grabs.
Yeah, it does look beautiful, doesn't it? Now, if you were with us a couple of hours ago, I completely embarrassed myself by mispronouncing the name of a rapper. I know nothing about rap, so I'm going to leave Stephen to tell this story.
This is to do with Kanye West, who's taken legal action against a virtual currency that was bearing a version of his name. It's called Kanye West, and it was supposed to be a more consumer-friendly rival to Bitcoin that we've been talking so much about in recent months. Now, the creator said it was inspired by his song Gold Digger, and they used his face on the original version of the branding for it, but it wasn't approved by the rapper, and his lawyers got in touch to ask them to change it. You can see the altered image now that Kanye are using. They've also dropped the West to try and get rid of their association to the rapper, and they've changed the image slightly. I'm not sure how pleased he'll be about using the pictures of fish, but those are the changes they have made.
Excellent. Perhaps he'll change his pronunciation as well. I said Kane West. What do I know?
Easy mistake.
Yeah. Thanks, Stephen. It's good to hear you defending